So, hello and good afternoon. I welcome you to today's webinar, hot topic webinar, Roblox IPO, and how to trade it. So, in fact, a very fascinating topic. You will see, we want to prepare already for the upcoming IPO. Yesterday, I've seen, or was it yesterday? Today is Wednesday. I think it was Monday, if I'm not mistaken, or probably was over the weekend. I don't know, but I can assure you that I came across a tweet which I also retweeted, and where, let me just see, yes, um, where I mentioned the upcoming webinar today. Let me just see. Okay, this is very interesting. Okay, there we go. Um, So, and they are about to go public in March, in 10th of March. So, in fact, when I prepared here this presentation for today's special webinar, I was thinking about that probably we could run into some trouble here, having in fact the IPO already through and have already seen the price action, only to give you some educational ideas on how to trade the IPO, because it's a special IPO. There are no underwriters in this case. So we are talking about a so-called direct listing. What this is, we will go through this in a few minutes. And the thing is that now it was made clear that the IPO will take place on March the 10th. So, which means from today, like, let me just see, I think it's around 2 weeks, something like, yeah, 2 weeks exactly. So in 2 weeks from now, today, 24th of February, on the 10th of March, you will see Roblox. The company will also go in detail through what they do and how they are valued currently and all that stuff. They will go public in 2 weeks. And why this is of interest is because based on IPOs and the fact that it's a direct listing, there's some special development probably taking place, and probably we will see how to trade, where we can use the information around the last direct listing, bigger IPO in this context, from a Palantir, a PLTR in this case. They went public. That was at the beginning of October or 30th of December. I'm not sure, but they also had a direct listing. There was some very interesting developments before the IPO, and also in terms of the so-called IPO price then in this context. And there were, in fact, two potential trading setups right on the day of the IPO and the day after, where we could use the IPO price as our, let's call it, line in the sand. So it's a very fascinating topic. In fact, we will go through today, and you can consider this webinar, hot topic webinar, to be a preparation webinar. In fact, for what will come in 2 weeks, I guarantee you will learn something out of this. I'm very sure. Probably Roblox will be one of the, if not the hottest IPO in 2021. And today we will shine a light on how to potentially trade thus these IPOs profitably, respectively, how to attack Roblox, and in this context, once the stock goes, or the company goes public in on the 10th of March. Yeah. So this is today's agenda. This is what we want to have a look at here. So first of all, we want to answer the question, what is an IPO? Then why it is attractive to trade IPOs. I've already mentioned it. You can probably to some extent already feel that I'm kind of excited about this, because IPO trading is in fact one of the most profitable ways to trade the markets. And this is due to the fact that the levels you can look at are predetermined, let's say, because there's no history. Like, you don't need to look at a chart and scroll and zoom in, zoom out, or something like that, or identify something like patterns or something, or some kind of divergences which probably occur in oscillators or that stuff. No, it's pure price action, and it's based 100% on price, and we can spot these levels already beforehand, respectively, based then, once the company goes public, on these prices and trade of these levels. And this is one of the reasons why IPO trading is one of the probably most interesting, and also from professional traders who know what they're doing, also one of the most profitable ways to trade, in fact, the markets, and in this case, stocks. We want to introduce Roblox to you, RBLX, that's the ticker symbol. Great company. I didn't know about the company several months ago, but then around, I think it was Christmas, or it was shortly after New Year's Eve, my the sister of my wife just mentioned this company during having coffee together, and that was the moment that she's not a trader or something like that, but she just mentioned it, that kids around the globe are really going crazy about this company, and this is what then got me interested, especially when I learned that this company will go public, and it's probably one of the hottest IPOs, as I already said. And based on the fact that many people look at it, there's already a let's call it a buzz around it, which is also making it a hot IPO, and probably even underlining the levels we want to look at then here in the upcoming minutes. We want to look at the direct listing, what this is, and compared to, let's call it a classic IPO. I already mentioned that there's no underwriters, and why this is of importance. You will learn this here during the next minutes. And then on top of that, I will also give you some potential hot IPOs in 21, which could be of interest, and where the knowledge you acquire here could also be used, because all IPOs are to some extent really the same, especially based on the prices we get then. Yeah, okay, this is me. My name is Jens. I'm located in Berlin, in Germany. I am, well, let me just think about this, 36 years old. And I started out in the world of trading, and really at a trading desk as a professional trader, really, not as a retail trader, the classic way to download a platform somewhere, opening an account, and then start out as a retail trader. But I really learned trading from scratch at a big stockbroker. Thus, I'm also familiar with certain characteristics, not just stocks have, but in addition to that, also IPOs have. And I'm located in Berlin, Germany. Why is this of interest? It's of interest because Atma Markets, the company, the host here behind this hot topic webinar, but also the trading spotlight webinar series you've probably seen once visiting the YouTube channel, has offices around the globe, and one office here from Atma Markets, financial service provider for nearly 20 years. I think it's the this year, this is the 20th birthday of Atma Markets, if I'm not mistaken. The company, which has also not just offices around the globe, but one here in Germany especially. And in Germany, we refer to Atma Markets as the DAX expert especially. So highly competitive, probably the most competitive offering when it comes to DAX trading. And this is something which is noteworthy, because it's not just limited, or it's not limited to the DAX and DAX trading in general, but it's more kind of usual. It's common, let's say, to have a highly competitive offering. Also, when it comes to FX trading, also when it comes to stocks. In this case, stock trading. It's a true multi-asset broker, with also giving you the opportunity to open an Atma Invest account, for example, to trade physical stocks, and thus then participate in dividend payments, for example, and being a true stockholder, not via a derivative and from a pure trading perspective, but also as an investor. So give Atma Markets definitely a visit, atmamarkets.com, for further information on the website. And yeah, we want to now dig into today's topic and answer the question on what is an IPO. Wait, let me just open a tab here. Okay, this is good. And then we will go through the first bullet point. So IPO is short for initial public offering. And initial public offering in this case refers to the process of offering shares of a private corporation then to the public in a new stock issuance. So this is what an IPO is, in fact. And public share issuance here allows a company to raise capital then from public investors. And in this context, this is the next point, the transition from a private company to one sec again. So from a private company to a public company can be an important time, in fact, for private investors to fully realize gains from their investment, as it's typically includes share premiums for current private investors. This is especially important when it comes to the current direct listing process. In fact, in general, it's a very interesting aspect. So, or to put it differently, so assume you started out as an employee after you finished studies after university of a classic startup company. And then, for example, Airbnb, for example, I think this is a classic example, recent IPO, and quite hot IPO, in fact, with a massive spike in price and a share price which brought the company to a multi-billion-dollar market capitalization at the first day of trading. And what's certainly interesting in this context is that I learned then, after tweeting about the Airbnb IPO, which had a certain buzz around it, I learned that there's someone among my followers who knows a girl who worked as a student for Airbnb, received shares, and never cashed in the chips, let's say. So she was part of her compensation plan, in fact. And after then going public, she now has the chance to realize her gains on these shares she's holding from the company. And this is a usual experience. In fact, in my personal life, I've also had the same experience in this case. So I had an employer who also went public and offered me to, or all the employees, in this case also me, then to buy shares beforehand at a discount, in fact. And then once the IPO went through, I was capable of cashing in the chips and doubling my money with like a snap of a finger. The thing is that, and this is a little unfortunate to be honest, that I found out several years after that the stock price now is 20 times higher than it was initially. So the company is really successful in what she's doing, and I don't really know. Back then, I didn't really know something about trading or something like that, or if it makes sense to keep the shares. But I have to say, well, if I had to choose again, I think based on back then my money, monetary living expenses, but also my whole life situation back then, it wasn't really necessary to cash in the chips. So, but okay, that's probably was it's my last, was one of the latest chances. Today I'm self-employed, and so I probably will only profit from such a development, and especially in a hot IPO environment in which we currently in. And if I go public with my own company, not really sure whether this will happen. But if you're listening or listening to this right now here live, or you're watching the recording somewhere in the future, probably think about the area in which the company who offers you shares, part of the compensation plan here, whether you really want to cash in the chips right after the company went public, or probably take some time and be patient a little. Probably it pays out. Let's put it that way. So that's the usual way. Meanwhile, here, it also allows public investors then to participate in the offering. And now, what isn't of interest for us is not really what is an IPO, but why is it attractive to trade IPOs? Oh, I'm sorry, that's a little unfortunate, but okay. Why is it attractive to trade IPOs? For us as traders especially? Well, first of all, they offer easy trades. It's a difficult word in this context because in trading, usually nothing is easy, let's say. But the thing is that it's very clear and clean levels which appear on the chart, because there is no kind of history, and there's no way to interpret things. It's just the price and the volume which is traded at each price, and then it all comes down to trade off certain levels which can be identified already right at the point once the company goes public, in fact. And based on that, you can really see that especially experienced traders can realize excellent, or identify and then also trade trades or enter trades which offer excellent risk reward ratios, in fact. So that's one of the reasons why IPOs are very, very interesting for professional traders. In fact, some professional traders, as you can see here, focus only on these IPO trades, in fact, and some form syndicates, and that means that they have a temporary alliance in this context of their businesses, and then try to manage a large transaction, in fact. So this is quite common in the world of IPO trading, let's say. And now the next thing is, and that's why Roblox is of our interest here, if the IPO is hot, so let's call it, there's a buzz around it. IPOs become even more attractive for professionals to trade, since the level to trade against, where you can take your trade against, then become much cleaner and clearer, in fact. So, for example, the price above the so-called initial pricing range points to lots of demand, for example. So usually you have, once you have an underwriter in this case, so like a big investment bank, this is especially true, the so-called tier one banks, you can see that comes in the next aspect, your next bullet point. If you have such a tier one underwriter, then they give out a price range. And once you see that the IPO price, the opening price, once the stock goes public then and is traded publicly, then that this usually points to a high demand, in fact. And in this context then, yeah, well, certainly here again, there's also some, let's call it personal attitude to this. So what do I mean with personal? Let's have a look here at the tier one institution. And then who is the tier one institution? The big institutional banks, investment banks, usually hear about in the financial media, like Goldman Sachs, like JP Morgan, like Morgan Stanley, like Credit Suisse. So the big banks who are known on the street. And once they, for example, underwrite an IPO, but also if they give an upgrade or downgrade to a company, you can be sure that it will at least short-term affect the price. And tier one in this context also means that they have they are known. They are known, and they have to make sure that they're how can I say it? They want to make sure that they're not getting embarrassed in front of the people they underwrite the IPO for, their business clients. So, which means nothing more than, in this context, once you have this classic underwriter, in this case, a tier one underwriter in a hot IPO, everyone is looking at, for example, in this context, think about Facebook 2012. Why is it of interest for anyone? Because it is, first of all, it's Facebook. So everyone knows Facebook. Everyone is using Facebook for years now. Everyone knew Facebook once they went public. It was a really big and hot IPO. And the next thing was that there were some technical issues that had nothing to do necessarily with the underwriters, but it has something to do with the Nasdaq, in this case, the stock exchange, who where Facebook went public. And so after they faced these troubles, let's say, they had to make sure for the upcoming IPOs to really overthink their way of how to bring a company how to manage this IPO in this context. And that was something which they want to avoid under all circumstances. If the whole world is watching, you don't want to be standing in front of the audience and just losing your pants, let's say, okay? So that's just usual. And this is in a certain sense, it's also true for tier one institutions, which want to make sure that the IPO is a success. So that means nothing more than, for example, if you have an IP a pricing range here between $18 to $20, let's say, and you have an IPO price which say is at 25, so you price the deal at 25, then the tier one institution in this context will make sure, as the underwriter of the IPO, that there will be solid demand among 25. So if the stock drops for whatever reason, so there's a short spike into the open and then it drops, comes down to 25, you can be sure that there will be strong demand, at least at the first day of trading in this IPO at this level, because the tier one institution wants to make sure that we do not drop below the IPO price, else it could be seen as a failed IPO, let's say. And so they want to avoid this. They just don't want to risk or they want to be embarrassed in front of the street in this context. And so this is a personal thing. That's what I mean if I say it's a personal thing in this context. And so now we want to now especially look at Roblox in this context. And who is Roblox, and why this IPO is of high interest for the street in this context. And then what we will do is we want to shine a light at this special direct listing procedure. And we want to use all this knowledge we have already acquired. And then we want to shine a light at Palantir to give you an idea of what to probably expect in 2 weeks from now. And before I start now with Roblox, let me just give a quick glance here. Okay, so I just have to check. I just have to check a slide, but everything seems to be fine. Okay, perfect. So who is Roblox? Ticker is RBLX. Who is this? So Roblox is an online gaming platform, online game platform, and game creation system that allows users to program games and play games created by other users. Okay, so naturally, I would say, I mean, I'm too old for this, so that's one of the reasons probably I haven't heard about Roblox before this discussion from from the sister from my wife. So I haven't heard about this company before, but what I can say is that currently, obviously, this is a hot topic given the fact that we're all stay at home and that kids are, yeah, like they seem to be fascinated by this, let's say. So this can be seen, especially once the company then began to grow rapidly in the second half of 2010, and that this growth has been accentuated by the COVID-19 pandemic. People stay at home, and especially kids stay at home, and they obviously play. It's not just that they learn when they sit in front of their screens. We've all been we all come from a younger generation, which means, like, I know I started out in the early 90s to play with a Game Boy. I think that's also the word, yeah, Game Boy, right? So this thing from Nintendo or something, and it hasn't changed. In fact, it has the demand for such gaming companies has increased dramatically, especially given all the developments haven't taken place, and compared to the quality, especially of these games over the last let's say, yeah, 20 years, in fact. So what's certainly interesting is that Roblox, as I learned, is free to play with in-game purchases available through a virtual currency called the Robux. And as of August 2020, Roblox has over 164 million active monthly users, with it being played by over half of all children in the US under 16 years old. I think this alone gives you an idea on how big this company is, which is very interesting now, since the question occurs, like, okay, where do they make money? And so since it's free to play and with in-game purchases available, but it seems as if the natural process is it's like self-feeding. So within the within this game, in fact, and thus Roblox right now. This was the last number I heard about. That was at the beginning of January. Is currently to be estimated to have an $29.5 billion valuation as a result of this large player base. So, and now the thing is, and this is already a question I've seen here in the chat box, the question, what is a direct listing? Okay, so and this is now where it's getting really interesting for us, because we can learn something of earlier direct listings, especially of PLTR in this context. So we refer to an IPO as an ordinary underwritten IPO at a set offered price, the way most companies go public. So there's underwriting company, tier one bank, Morgan Stanley, JP Morgan, whoever, and they underwrite such an IPO. And they are also potential supporter of the price, and they are a big player who can make or who are in charge of making an IPO naturally a success based on, for example, saying, hey, we keep the demand high enough that we do not drop below the IPO price, wherever it might be. And so Roblox in this case won't go this way, but will conduct a direct listing of its shares, which means nothing more than Roblox will offer the shares to the public at whatever price investors are willing to pay. So this is like it's not like underwriting or something like, but at the 10th of March in this case, as you will see in the next slide. So there's this announcement I've came across over the weekend. Well, you can just trade Roblox shares, and the price of the Roblox shares will be based on supply and demand. There will be a first price where Roblox goes public then. So this is something we also want to dig in deeper at a later point. And from there, supply and demand will decide whether the market, or the stock in this case, goes up or down. And So the interesting thing now is that instead of using its IPO to raise cash, so to use going public in this context and make people somehow excited about the stock and say, hey, we want you to buy our shares so that we get more money, so that we can invest it in our company, as is the usual way once you go public with a company. Roblox simply allows the people who currently own its shares to begin selling them to the public, which equals to 196.7 million Class A shares of Roblox. So I'm not really sure. Okay, I'm not really sure, but this is not all shares, but the company is still owned by the founder. I'm not really sure about this name right now, but you can read all this up. Just Google Roblox IPO and you get further details. I have also a link I can share, by the way. Let me just see. I will. Oh, it's not open, but I will share it in the description box below this YouTube video here. So you will have a link for further details then on this IPO. Let me just see here. Okay, perfect. So everything fine. So by the way, if you have any questions, just not just only feel free to ask them here in the live event in Zoom, but also on YouTube. There's also a chance to ask your questions. I have also have them here on the screen, so don't fear that I miss these questions, but I have them on my agenda here too. And no, let's come back to the IPO and the direct listing. So, which means nothing more than Roblox itself does not receive any proceeds from the sale of the stock in this context. And now, this is very interesting because now you can already get an idea. If you do not have an underwriter, you don't have someone who potentially supports the stock. So this is of high interest because now you can say, okay, I have the IPO price, which is then also the opening print of the stock. It's not just the range or something I give out and then say I see the stock trading above that or below that, but it's really like I have the IPO price, and based on that I can say whether there's natural demand or not for the stock. And in this context, to understand this concept behind this, let's have a look back at the direct listing from PLTR on the 13th of September last year. Once again, before we start, let me just check out once again here. Okay, this is interesting. Okay, so the thing is that PLTR went public in September, and what they had is that there was the NYSE who had a pre-indication that was based on what they had based on their information and where the stock is now traded. The NYSE had a price of something like 7.50 or something. So that was their price for a PLTR stock, which is very interesting because we weren't even close to that level, but we were significantly above that. In fact, there is the Wall Street Journal. Oh, I haven't done it here, but the Wall Street Journal gives an indication based on their input and their information they receive. And shortly before Palantir went public on the 29th of September, here the Wall Street Journal said that we are somewhere in a range to something like 950 to 1025. So this is where here the price comes from. And then coming closer to the opening, the range tightened to 995, 1005. And the opening price was exactly at 10 USD. So this is very interesting because it gives us already an idea on which price to potentially focus on. It needs research from our end, no question about that, but it's definitely worth to put in this time, as you will see in the next slide or next slides in this context. So for Roblox, it means nothing more that what we should do is do not focus on the reference price the NYSE is referring to in this context, but what we should do is we should look at the so-called indicated to open price from for example, the Wall Street Journal. So just check Google for further information on whether you get some more insights here, and then we take this as the reference price for the price action of the upcoming days and level to trade off. So again, we'll see the IPO taking place. And before that, we have already an idea based on the input you receive, most likely from a newspaper like the Wall Street Journal, where the price is set, where the stock will likely open on the first day of trading. And once you have this, you can already draw some conclusions. It's not that you say I'm buying or I'm selling here right when the first print arrives, and I will just jump into the action, but you have already an idea to formulate a game plan based on that. So let's now have a look here again at this tweet. Let me see, 20 seconds. So yeah, it was one day. So Roblox Corporation expects shares to begin trading on NYSE on or about March 10. So not necessarily at 9:30 Eastern time. So 2:30 London in this case. So right when the Wall Street opens, but probably slightly after that, 1 hour, 2 hours later or something. So it's not necessarily right at this time at 9:30 Eastern in this case. And again, here also again, Roblox Corporation going public via so-called direct listing. And now we want to use this information and have a look back at PLTR in this context. So what I did was, what I did is I took a screenshot from the first day of trading. So we have further price action now taking place. So in fact, as you can see here, we are now right now trading around 27 USD per share. Once we went public was $10. So we are nearly 270% above the IPO price, which was at the 30th of September 2021. So nearly half a year later, not even close, we are already trading 270% higher. Plus, in addition to that, we already traded as high as 45, I think, or something. So this is something where you can already see the price action of the first days do not necessarily give you an idea on what to expect for the upcoming days. But it's interesting based on the knowledge of there is no, as we can call it, there's no tier one institution who has an interest in supporting the price. So what we have here now is the following. PLTR went public via direct listing on the 30th of September at an IPO price, first print 10 USD. And then it was a direct listing. Unfortunately, I had no chance to include an animation here. But what you can see is that there was this initial spike higher. We traded as high as something like 1150 that day. Okay, so right from the open, there was some strong demand for the stock, obviously. So demand was higher than the supply. There was this push higher. And it was still a direct listing, so there was no underwriter supporting the IPO price. And then what happened in the last minutes of trading here, as you can see, by the way, so this is a 5-minute chart. You can already see that we started trading somewhere around noon, I think, something like 12 or 1 p.m. Eastern time in this context. And then what happened in the last minutes of trading was after this initial spike, obviously demand diminished. We dropped lower and we went back to the IPO price. And now things are getting interesting because the IPO price is the price where every market participant is looking at, because this is the only price you really know and which has significance in this context. So there's no pattern or whatever, or formation or divergence forming or whatever. But the only thing you really know and everyone else knows in this context is the IPO price. The first print was 10 USD. And what we also know is that since the initial spike was higher, below 10 USD, there's no support. So we don't really know once we drop 10 USD, if we drop 10 USD, how far the stock will drop in this context. And so what we see is that we drop back towards 10 USD. And then what you could in this moment do, in fact, is you could say, okay, I'm selling a drop below 10 USD, like sell stop at 998 or something, and really trade off this level and expect further selling pressure to occur. Since now market participants are probably about to dump some of their shares they acquired earlier that day, and now seeing that the demand is not strong enough to hold above that level. And once we drop here, and by the way, so when I'm talking about good risk reward trade, so what you could see is that within minutes, In fact, in the last hour of trading, we dropped as low as 9 USD. In fact, so just to put things into perspective, if I have 10 USD stock and it drops $1, it's a 10% move. And if we say it's a $1 drop in this context, and we have a really like a really great level to trade off, we can easily, I would say, in this context, I haven't displayed it here, but we could easily, for example, use the ATR in this context, something like that. Or no, ATR doesn't make sense. No, forget about it. ATR does make sense when you look at this price, the chart right now, and to trade it off. But in this context, probably what you could say is we risk something like 20 cents or something. So given our feeling about the current price action, so certainly you have to see in a 1 minute chart, probably in this context, how strong violently the stock moves in one or the other direction. So in fact, volatility can be quite, well, let's call it elevated at least, due to the fact that there's no calm down due to a tier 1 institution underwriting the IPO. But still, I'd say this trade is probably good for a risk reward of 5-1 in this context. So if I can really sell the stock at, let's say, 10, and then covered somewhere here around 9 in this context with a stop of something like 20 cents per stock. And what's even more interesting now is if you say, okay, well, I don't want to trade an IPO right on the day of the IPO, but I will look at it the day after. It's also very interesting to note the following. So you can see here, there's the gap. So trading is taking place between 9:30 to 2022 in Germany, 4 p.m. Eastern time in this case. So what you can see is here, the market starts slightly below that day, starts slightly below 10 USD, but can't really make it above that level again. Instead, the stock drops from here again, seeing selling pressure. So you do not have any chart patterns from the past. You don't really have any levels, only one, in fact, the IPO price. Okay, you know that the IPO price had significant, or was of significance, due to the fact that after dropping, obviously you could see heavier selling occurring in the last minutes of trading on the IPO date. The next thing you know is, okay, there's somewhere around 11:50, I have the high of the day. And well, I also have the low of the day. You can then look for a retest probably, but you have no more information about that. You just have the IPO price, you have the high of the day before the IPO day and the low of the day. And that's it, in fact. You have no formation, nothing. And now what you see is that the market spikes into this IPO price again, which is now becoming, after being a support right from the open of the IPO day, now it's becoming a potential resistance zone. We can't really make it above that. We can't really recapture that level and roll over here again, which is giving you, again, a great opportunity, risk reward wise, to trade against that level. So I haven't a real trade here, but what you could certainly do is, for example, to look here at the open range of that day. So the first 35 minutes of the day, probably you have a range of something like 20 cents again, probably even closer than that. But if you now go for a break of the low of the day, let's say 9.80, and go for a retest of the region around 9, you still have a chance of 80 cents and risking something like 15, probably 20 cents here, which gives you, again, a risk reward of 4-1, probably even greater than that. And so this is just two ways here in this context, how to use the IPO price and the knowledge around IPOs, and especially the specialty, let's call it, around direct listings and no underwriting taking place, no tier 1 investment bank really, how can I say that? No tier 1 bank supporting the IPO price. So there's a risk that once the initial demand is not given anymore and supply is greater than demand, that the stock just drops. And once it drops below the IPO price, there's a natural tendency for market participants probably who bought the shares right from the start of the day, probably here seeing this initial drive higher, aggressive drive higher in PLTR in this case, just seeing that it was not a sustainable move and then dumping their shares once the IPO price drops, which naturally results in further momentum then on the downside. And once here, that is the next day. Even if you didn't interpret the market price action that way on the day of the IPO, you still can interpret it that way and see the significance of the IPO price the day after the IPO. And this is the same way how we can treat and look at, for example, the IPO from Roblox in this context. So once we do not know where the IPO price will be, what we can certainly say is, okay, once we have the IPO price and the first print, we will see once there's demand coming into the market or not. If there is demand coming into the market and we see a certain development as we did in PLTR, we have no trade. We start to get a trade once we get a clear sign that there's no drop below the IPO price. So once there is supply coming into the market, which is then overcoming the demand and diminishing the bullish momentum, well, we could say, okay, we obviously stabilize above the IPO price. There is stronger demand given, which gives a higher likelihood that we'll continue to trade higher over the day. If we drop to and below the IPO price, that's a bearish sign. We could trade the drive lower in this context straight away and sell the break below the IPO price with a quick with expecting a sharper decline below that, and also having a quite clear level of 10, 20 cents, probably 20 cents, depending on where the IPO price is then here to risk 20 cents in this case to probably gain $1, just to give a number. And even if we do not plan to trade it that way, what we have the next day is a clear level to trade against once we drop below the IPO price, see the bounce back into that level, or we probably see on the second day the run after a strong IPO day. In this case, we see a drop and then sell the break short once we see on the second day of the IPO the drop below the IPO price. But all in all, it doesn't really matter what formula, what setup you formulate based on the IPO price. What we certainly know is that in the case of a direct listing, as we will have with Roblox, this is the price to look at. This is the price to trade off. And based on that, you can then take your decisions on whether to take the long or the short side, depending on whatever game plan you formulate for yourself. So two potential hot IPOs. I'd like to say the following. So first of all, there is other companies which are then probably going the, let's call it classic way, not the direct listing in this case. We probably have a quite interesting potential stay-at-home COVID-19 IPO here with Instacart, food delivery company. We have also a clothing marketplace, Poshmark. What I think is very interesting is the retail trading platform Robinhood, if they go public after all the developments having taken place around GameStop and all this. So this is definitely, especially among traders, certainly a potential hot IPO. We have then the software company UiPath in this context, and also the lending company Affirm Holdings. It's short with AFRM. I'm not really sure. Probably they've already had their IPO, but if that was the case, I probably have heard about it. So probably not. But these are potential hot IPOs in 21. You should look at, you should have your radar, you screen your radar for these IPOs, because again, as I already said at the beginning, and as we will see now in the summary, these are very interesting chances, or delivering potential chances to trade actively and have clear levels to trade off from against them, and deliver sometimes fantastic risk reward trades. So initial public offering, short IPO, refers to the process of offering shares of a private corporation to the public in a new stock issuance. Professionals like to trade IPOs because they very often offer easy trades with clear, clean technical levels to trade off. They offer most of the time excellent risk reward trades here. And while they are attractive to the short-term trader, recent developments in the IPO sector point to a potential bubble resulting in diminishing risk reward. So as I already said, when you look, for example, at Dashdoor, when we look at Airbnb, when we look at Snow, when we look at a Palantir in this context, so there was strong demand also the months after that, but still from a risk reward perspective, it's sometimes not as easy as it looks then in the aftermath, let's say, after the IPO has taken place. So the developments here we have seen are definitely something to be not scared about, but still be a little, especially when it comes to longer term investments. It should be taken into account in this context. And so this is definitely something to take care of. Once it comes to short-term trading, as you have already seen, then they can be very, very interesting ways to trade the price action. And don't forget to join us next time. So this is Wednesday. On Friday, Paul will be here and talk to you about trading the Japanese Nikkei index in this case. So including what is the Nikkei. So some of you probably have heard about the Nikkei already, the equity index in Japan in this context. He will answer the question why it is important and also how you can certainly trade it, probably of interest for you. 2 p.m. London, 26th of February on Friday. And if you have now already registered for the Trading Spotlight webinar series, then you can just check your inbox for the webinar link. If not, since this is a different webinar here, so this is a hot topic webinar, which means you have to register for the Trading Spotlight webinar series another time on the website. So please then head over to Atma Markets, in this case, atmamarkets.com, the education tab, and then the webinars tab, and there you can register for these Trading Spotlight webinars too. And here are further information on the contact details. Please feel free to check out not just the website, but also the YouTube channel. Some of you are already here. If you haven't done yet, so probably you like what you've seen, so please leave a thumb here. Also subscribe for the YouTube channel, and so you don't miss any further webinars anymore. And that's it from my end. So here's the risk disclaimer. I hope you learned something. If you have any questions, please feel free to shoot an email. Ask the questions right below the chat box of the webinar here on YouTube. And oh yeah, sure. The question on the hot IPOs, certainly I can go back to this. So here's the risk disclaimer, but now we go back. So these are here the hot IPOs for 21, and that's it from my end. So all the best. I wish you happy trading. Watch your stops. Please feel free to ask your questions all the time. I'd be happy to answer them. See you there.